Is Canadian real estate still the best investment in the world? Or is it facing an unprecedented reality check? Welcome, analysts. Today, we are not giving you answers. We are giving you questions. 20 of them, to be exact. A quiz designed to make you think critically about the future of Canada's property market. Grab a pen, get ready to pause, and let's challenge our assumptions together. Our journey begins with the core economic landscape. Question 1. With the Bank of Canada holding interest rates steady, but inflation still a concern, what is the single biggest risk to property valuations in the next 12 months? Is it a sudden rate hike or a prolonged period of economic stagnation? Question 2. We often hear about a housing shortage, but is the problem truly a lack of supply, or is it a mismatch between the type of housing being built and what Canadians can actually afford? Consider the explosion of luxury condos versus the scarcity of family-sized homes. Question 3. Construction costs are soaring. Replacement cost, what it would take to rebuild an existing property today, is a key metric. As this cost continues to rise, does it create a permanent new floor for property prices, or does it simply price new developments out of the market entirely? Take a moment to consider this. Now, let's look at the returns. Question 4. With capitalization rates, that's your net operating income divided by property value, compressing in major cities, are investors still being adequately compensated for the risks they're taking on? And question 5. If global supply chains continue to stabilize, leading to lower material costs, which segment of the real estate market will benefit most? Will it be new home builders or the renovation sector? So far, we've examined the big picture: interest rates, supply, costs, and returns. These fundamental economic drivers are the engine of the market. But the story changes dramatically when you zoom in. Let's shift our focus to regional dynamics. Question 6. The narrative has shifted towards Atlantic Canada, with places like Halifax seeing incredible growth. Is this a sustainable, long-term trend, or a temporary migration pattern driven by the search for affordability that will eventually reverse? Question 7. For decades, Toronto and Vancouver have been Canada's undisputed real estate kings. What specific economic event would have to occur to dethrone them? Think beyond housing policy. Could a shift in key industries or trade routes be the catalyst? Question 8. Canada's ports are vital economic lifelines. How will the multi-billion-dollar investments in port infrastructure on both the east and west coasts reshape real estate demand in surrounding areas over the next decade? Think about logistics, warehousing, and residential spillover. Let's pause and think about that. We are halfway through. If you're finding these questions valuable, take a second to like this video and share your initial thoughts in the comments below. We'd love to see what you're thinking. Back to it. Question 9. Immigration is a major driver of housing demand. But as Canada's population targets grow, are we strategically planning for where these newcomers will live, or are we simply adding pressure to already strained urban centres? And question 10. Provincial politics play a huge role. Which upcoming provincial policy, whether it is zoning reform in Ontario or resource projects in Alberta, do you believe will have the most significant and unforeseen impact on property values outside of its own borders? We've moved from national economics to regional plays. The key takeaway here is that Canada is not one single market. Investment success increasingly depends on understanding these local and interprovincial dynamics. Now, let's talk strategy. Question 11. The classic buy versus build dilemma. In the current environment of high construction costs and lengthy approval processes, is it more strategic for large investors to acquire existing assets or to undertake new development projects from scratch? Question 12. The renovation market is booming. Does this represent a long-term strategic shift where upgrading and optimizing existing buildings becomes the dominant form of real estate investment, surpassing new construction? Question 13. Real estate investment trusts, or REITs, offer an alternative to direct ownership. As the market becomes more complex and capital-intensive, will investing in specialized REITs, focused on industrial, residential, or even data centers, become the smarter play for the average investor? Take a moment to weigh the options. Let's continue. Question 14. The concept of highest and best use is a cornerstone of property valuation. With the rise of remote work and e-commerce, how has our definition of the highest and best use for commercial and office spaces fundamentally changed? And what opportunities does this create? And question 15. Looking at a 10-year horizon, which alternative real estate asset class, like farmland, self-storage, or long-term care facilities, presents the most compelling risk-adjusted return compared to traditional residential or office properties. Our strategic review shows a market in transition. The old rules of simply buying and holding might not be enough. Success may now lie in strategic acquisitions, adaptive reuse, and exploring niche sectors. Finally, we arrive at the reality check. Question 16. The affordability crisis is undeniable. At what point does the gap between average wages and average home prices trigger a significant social or political intervention that fundamentally alters market dynamics? What would that intervention look like? Question 17. Many analysts forecast a market recovery by 2026. What is the single biggest black swan event, an unpredictable, high-impact occurrence, that could completely derail this optimistic timeline? Question 18. We often hear it's not about timing the market, but time in the market. In a high interest rate environment where holding costs are significant, does this old adage still hold true, or does precise market timing become more critical for success? Let's pause on that for a moment. Almost there. Question 19. If you had to allocate $1 million into Canadian real estate today for a 20-year hold, how would you divide it? Would you put it all in one property, diversify across regions, or invest in a mix of REITs and physical assets? And our final question, number 20. Stripping away all the noise, what is the single most important lesson the Canadian real estate market has taught investors over the past 3 years? From national economics and regional shifts to investment strategy and the final reality check, we've covered a lot of ground. The goal wasn't to find simple answers, but to embrace the complexity. The future isn't a fixed destination. It's a landscape of possibilities shaped by the decisions we make in response to questions just like these. Thank you for joining us on this analytical journey. The path forward is rarely clear, but the act of questioning is what keeps us prepared. Continue to challenge assumptions, dig deeper than the headlines, and above all, stay analytical. Thank you for watching.